start with the crude prices, where the Brent has slipped below 109 a barrel on expectations that the demand growth will slow as severe weather eases in the U.S. But worries over supply is keeping the losses in check for now. The gold prices in the meanwhile also are little changed but on track for its biggest monthly gain since the month of July, after investors and speculators chased the prices higher on concerns about the pace of U.S. economy and of course unrest in much of Middle East. The recent surge in gold prices has got traders excited. They feel that the gold prices have bottomed out and will move higher from here on. But they do believe that the import curbs on the gold should be eased, as it has given rise to smuggling and has hit the Indian industry as well.
गवर्नमेंट ने जो पॉलिसी लाए थे और कस्टम ड्यूटी जो 1%, 2% से 10% कर दी गई और गवर्नमेंट नॉमिनेटेड एजेंसीज के थ्रू गोल्ड दे रहे हैं, इससे बहुत समस्या आ गई है। इंटरनेशनल मार्केट और नेशनल मार्केट में 20% का फर्क है, जिससे स्मगलिंग बहुत बढ़ती चली जा रही है।
इंडस्ट्री इज प्रैक्टिकली बॉटम्ड आउट इन इट्स परफॉर्मेंस, in its growth, in its every single manner it has bottomed out. Any further delays, this industry will collapse. And a collapsing industry doesn't make a big noise. It just dies its hearts out. And I think it is the right time for the government to step in.
We can only ask, we can't dictate, unfortunately. And we've been telling, and there's no reply. You know, irrespective of the domestic trade, you see that even the exports are going down, down and down. And the reason is non-availability of raw material.
All right, those are the heads of various gold, jewelry and gems associations in India who really are pointing at the same picture, that if the government does not move in sense of easing curbs, then you will see the industry continuing to go into the suffering. Vijay, what's your sense, first of all, when it comes to the gold prices? Yes, we have seen the Indian markets continue to trade on the higher side. And the second question, of course, is the curbs, the higher ones.
Well, Manisha, first of all, where prices are concerned, I would maintain that gold will run into some amount of resistance at 30,400 rupees in the April contracts. And 200 rupees upside is what I would give it. I'm talking of the next one or two trading sessions at best, unless you see any kind of fresh data points emanate from either the US or European economy. Where the curbs are concerned, I would tend to basically be in confirmation with the industry that it's about time when import duties are eased off. And basically what is happening is gold is coming in through the unauthorized channel, and what is happening is the investor or the end user getting a raw deal because of the significant premium being built into the gold prices. That there's a very bizarre shop shelf point of sale as compared to MCX prices. So this is resulting in a lot of money going in off the books. I think it's better that the import duties are basically rationalized and let the trade and industry survive, along with the investors benefiting, of course.
Vijay, also, how would you look at the crude oil prices now? Because we have seen this week actually close on a very marginally flat to weaker note there, but the month, of course, has been quite positive.
Absolutely, Manisha. I think what you are likely to see is a retest of 6,400 or 425 levels. That's where I would expect crude to run into resistance all over again, and I don't really mind venturing out a small-sized short sell at that point in time, with an express intention of squaring up those shorts if at all they do manage to materialize. First at 63.60 odd levels and then at 63.20 levels. If that does not occur, and crude oil on MCX violates the 63.20 levels before really going up any higher from where it is right now, I think we are in for something like 62.70 or 62.75 levels in the next one or two trading sessions itself.
And the natural gas, of course, has been the major performer there. We have seen huge amount of volatility coming in for that one, Vijay. Nearly 26% down. If we can show the weekly chart for the natural gas prices, it's down 1.5% today. But let's get the weekly prices on screen, and the decline has been quite immense.
Absolutely, Manisha. The kind of rally that you saw, we talked about exuberance rather than optimism. And exuberance over a period of time in asset prices, especially hard assets, is very difficult to sustain. Now, going from one end of the pendulum to the other, from 400 plus levels down to sub 280 levels, the absolute near-term outlook for natural gas is that at 270 or 275 levels, I think it would give a lower risk proposition if you were to buy from here with a clear intention of selling out at 290, 295 odd levels. And unfortunately, this rally may or may not sustain at this point in time. I'm not clear as yet. But what I would do in order to capitalize on this opportunity is trade on very small exposure levels, because the risk to capital is significant in terms of volatility. So I would keep a very strict stop loss. If at all I do manage to buy natural gas at between 272 to 275, I'd keep a stop loss at 265, and I would have a clear target of 290, 95 levels where I would book out of longs.
Also, Vijay, how would you look at the base metal space? Because the economic data from US and China both has been slightly lower in the recent all sessions, and that really seems to be impacting that space.
Well, Manisha, what you are seeing is a kind of a illusionary upthrust in prices, thanks to the expiry and thereafter the rollover from the February month futures to the March month futures. What you are seeing is the cost of carry being built into the prices, and to a lay trader or a lay technician, it appears to be a breakout or some kind of an upthrust on the daily or intraday hourly chart. But more often than not, these upthrusts on expiry days tend to fizzle out in the next 2 or 3 trading sessions at best. So I would not be in a hurry to buy any industrial metal. I would wait and watch for the next 2 or 3 trading sessions as to how prices pan out, and then take a fresh call. If at all I see nickel going past the 915, 920 levels, yes, I don't mind taking a momentum-based call. If I see aluminium sustaining above the 109 levels, I don't really mind going out and taking a punt on the long side. Again, the exposure levels would be fairly truncated. If copper was to rally another 7 or 8 rupees from here and sustain above those levels, then I would give some serious thought to buying copper as well.
Let's talk about the agro commodities now, where you have seen good gains continuing for the potato prices there. We have seen prices run up quite strongly in the recent few days there. Also take a look, there's that 3% up on your screens coming in for the potato MCX, near 1200 rupees onto that space. We have seen some gains continue for the sugar prices as well. Remember, in the international markets, we have seen the sugar prices rebound from those January lows to up nearly 20%, and that really tells you that it is getting into that bullish territory. Some support also continuing for the wheat prices. Vijay, for all of these 3 commodities, what's your sense going forward?
Well, Manisha, potato at 1200 is something that I have recommended as initiating or beginning to initiate short positions. I still stand by my view. I think 1200 plus levels, and you can slowly but surely start to short potatoes. However, rather than going for potato March futures at 1200, I would suggest looking at July and August at 1400 and 1425 respectively, and then slowly, gradually, for every upper circuit, if at all, start to ramp up your exposure. Where wheat is concerned, we talked about how the downside was fairly truncated below the 1600 levels, and I talked about 1588 to 1590 about a week ago, where wheat would again present a buy opportunity, and there you have it's jumped up approximately 40 rupees plus from there. I would not really be surprised to see wheat attempting, now I'm using the word attempting here, attempting to rally another 20 rupees from here before it could run into some kind of resistance. So upside potential is not ruled out, though I would not initiate fresh long positions at the present moment. If at all you are somebody who's holding long positions of wheat in the prompt month futures, you do stand a fair chance of getting another 10 if not 20 rupees on the upside. So you can plan your trade accordingly.